Hi, Leah Odom with Homeowners Financial Group. I'm a mortgage loan officer in South Carolina, here to answer questions for you about mortgage lending to either buy a home or refinance a home here in South Carolina or anywhere else really, but specifically South Carolina since that's where I'm located. I hope you're having a great day, and I hope that this answers a few of the mysteries around a conventional loan, because that's what we're going to talk about today. What is a conventional loan? Conventional loan is probably the most commonly used, most talked about type of mortgage loan, and it sort of sets the standard. It is actually one that has guidelines already created, and if you're using a good loan officer or company, they're going to know those guidelines in advance and be able to tell you whether or not you qualify. A lot of people think that you need 20% down to get a conventional loan. That's absolutely not true. Do you want to try and put as much money down as you can? Absolutely. But I will tell you, the benefit there is that once you get to 20%, you don't have to pay private mortgage insurance, thereby reducing your actual monthly payment. And remember, mortgage insurance doesn't benefit you in any way beyond allowing you to put down less than 20%, because it's really an insurance policy to protect the lender or investor. So bear that in mind. You can put down as little as 3% if you're a first-time home buyer on a conventional loan. Generally, you can get a conventional loan on a multitude of properties like manufactured homes, duplexes, condos, investment properties, second homes. That's a big popular one. You can get conventional loans for your student who's going to school. There's lots of different ways that you can use conventional loans to help you secure a mortgage. So here's a little bit about what you're going to need to get ready to get qualified. First of all, you want to try and get your credit score as high as you can. Really, you want to shoot for about a 680, because not only does your credit score impact whether or not you qualify, it also impacts your interest rate and it impacts your private mortgage insurance premiums. So you want to make sure that you've got as high a score as you can. This is a good reason to connect with a lender as early as possible so you can start scoping that. There are free services out there where you can look at your credit report, but remember, your lender is probably going to have a different report because it's a different nature of the inquiry. So you want to do this at least 2 to 3 months before you really decide to start looking. So credit scores at or around 680 are really where you want to be. If you're not at 680, it's okay. Good lender can help you figure out how to get to the desired score, or there are other loan products out there beyond the conventional loan products. But 680 should be your mark where you want to try and shoot for. Most investors, most lenders will do conventional down to 620. And that's where you really want to have a hard conversation and ask the right questions of your mortgage loan officer, because they'll help you compare the loans and see what's the best strategy. But you don't have to have 20%. You can have down as little as 3%, and you can finance more than just a stick-built home. So that's part of it. Also, you want to make sure that you can document your income, right? If you're self-employed, you're going to need to have at least 2 years tax returns ready to go. And if you are applying outside of the normal tax season, like beyond April, you're going to want to have a profit and loss statement. So just get ready with those things, or know that you're going to need to have access to those things.